Welcome back, everyone. Thank you all so much for taking the time to support the channel and join me within this daily GameStop review video, going through our technical analysis, options chain overview, and of course, any news that we may want to discuss. And to start off today's video, we have an S3 filed, which is, it's a shelf offering, if you will. But they've not done an offering. They're just kind of setting up the terms and conditions for that in the future. So typically they would have to file paperwork and get this approved. They no longer have to do that, right? That's kind of all that's really changing here. So we would see, paperwork come out before, like, okay, GameStop's going to do, a bond offering, and we'll be pricing that, in the coming days. We won't get that anymore. We'll just say, hey, we did a bond offering and we priced it also today. And then we'll just kind of find out about that and not necessarily have the heads up that it's going to take place. So just kind of acting more in the moment going forward, which is okay, right? That's something that's very, very good, that the board can act appropriately without getting hung up with any paperwork or filing approval that they would typically have to go through without this. So that's pretty decent. We have a write-up there. If you want to get more into it, it is really nothing to get into as far as I'm concerned, other than, it's going to allow them to act more in the moment, moving forward with, that debt offering, that shelf offering. So last week we filled the gap, which was great. Good news, technically speaking. Gaps reject once they fill. It's unfortunate, but it is the way of the technical trade, and that's why we do our technical analysis, right? So we discussed in our last video how, if we start to retrace, we can look for support at the 1 hour order block, which we did find a little bit of support there, but we broke through it, unfortunately, retested it, which, made it into a bearish breaker block, unfortunately, and then the rest is history as it broke down further, and we finally find secondary support at that 4 hour. So, our previous technical analysis working out really well, even though we don't necessarily like it, it doesn't fit our bias, but it is what it is. And, I try to give an honest readout of everything, that it was likely to reject the gap, specifically when we've seen this 15-minute bearish order block form. And then, where do we fall to is the big question. And then we're going to kind of talk a little bit more about that today, because this could be it, but maybe it's not. And, we have to be prepared for all scenarios, right? With that being said, we have a bearish order block formed again, not only off the gap here at top, but intraday here off that 50 EMA rejection, which is unfortunate, which would push us down again to that 4 hour. We don't care for that. However, on our 1 hour chart, if we can jump down here, we can see that this order block remains with that sell side, right? So if we just transfer this over to our 4 hour quickly, we can see that 4 hour order block is intact. And technically speaking, sometimes you won't like my technical readout, but other times you may. This is a bullish entry model. Many technical traders are going to take an entry at the retest of this order block with a stop loss below it. That's great. So this is a really good spot for us to start the week, as long as this order block can hold. Of course, if it doesn't, that's super unfortunate, and we can move down from there. But it should, and there should be buy pressure coming into the stock just based on this retest, right? Off of an extended sell-off, right? We should bounce back. With that being said, getting into our 1 day, we have our golden cross on the EMAs set. Want to see that hold, right? If it doesn't, we do have the bullish breaker block here still in play. And then, worst case scenario, well, not worst case scenario, but there was the gap up on the warrant announcements and the earnings beat. it's unlikely that it happens. It's super duper unlikely that it happens. But just how we filled the gap and rejected downwards, we could very much do that same thing where we fill the gap and then bounce upwards. However, a lot of these bullish gaps don't fill on a long-term reversal. We have multiple gaps just on the S&P 500, for example, that are never going to fill, right? The market's strong. It's, a turning point, and, you're never looking back. And that's kind of what we have with GameStop, right? We had a massive earnings beat. We have corporate catalyst moving forward. So, yeah, we could fill this gap and then bounce backwards up again. However, I just think it's unlikely. Okay. And then, with that being said, even more unlikely, we get back to the bottom trend here. And then if that breaks, I honestly don't even know. We would definitely want to think everything. We've got these sell sides here to protect us, but that's like the world is ending, the whole market is crashing level. I don't think we necessarily need to even worry about much of this. I think what happened is the filing that came out is an S3, and that gets picked up by the algorithms, and they blast it down, right? B, we had a lot of movement on the options chain. So many sold calls because everyone brought their covered calls back, right, for the warrants, and then diving back in, and there's just so many sold calls across multiple weeks. What is this, like 37,000 28s? And then we have 12.3 thousand 30s, and then 19,000 30s as well, right? So a ton of calls fresh on the chain being sold since people got their shares back. Cost to borrow, available shares drying up, which supports that. On that note, the GameStop short interest isn't really spiking, right? Not what we'd expect. So I am going to attribute that to the call chain, right? Just a lot of covered calls, being put on the chain, and then, that's not upwards pressure. It is a bearish bet. So hold us down on that note. They're just not worth a lot, picking up pennies in front of a steamroller. If you got 1 billion shares, great. Like these 28s on the week, what were they worth? 23 cents, $20, And if you have a trading fee, there's $11 on top of that. Okay, so now you're making, that's a lot of risk for almost nothing. However, a lot of people are very comfortable with the trades they're making. They have a ton of shares at their disposal. So that is the way of things. Now, with that being said, these are likely to be added to the chain and used to walk us up as a ceiling. We're going to watch for that moving forward. Things are really up in the air. So again, we theorized that the options chain liquidity would get really bad. That it did. The spreads are ridiculous. The difference between the bid and the ask is quite wide. So to exit a position that's specifically out of the money is brutal. You got roasted. That's subject to change moving forward. Again, the play with the options was always to sell at the gap fill, right? At least scale out, reduce your risk. It was at a weird time, I'll admit, with the warrants, the ex-delivery date, or ex-dividend date, pardon me. However, moving forward, let's check out Kitty's charts. Rambly every day. Some people said they don't mind the ramble. It's going to save me a lot of time if you don't. It'll just be like 420 69 uhs later. We wanted to see the upward trend on the RSI hold during a pullback. It didn't. So that uptrend has been invalidated. Ouch. Maybe Monday morning we gap up and it's just kind of a false breakdown. I still wouldn't like it. And, now our uptrend is, not nearly as nice, but it's still there. And I'm going to leave it here so we can be, reminded that it broke down. The PMO on the 4-hour did not reverse. We're kind of wanting this to reverse in our last video, and we're like, okay, the signal said we just need to break through. Unfortunately, it rejected down. So this looks really, really bad for the 1 day. I know a lot of people, and even myself, were expecting that this 1 day would continue. It looks unlikely. However, with that being said, we may just have a false reverse like we have before, which kind of would line up with the timing, but we will need some positive price action next week to kind of, put this, a little bit in a more likelihood of taking place. So looks bad, but it could swing back. All of these are lagging indicators, right? They're going to follow our price action. So if we do have positive price action, a lot of these indicators are going to go from looking bearish to bullish. That's just kind of the way of things. You can't typically only use one of them. You have to combine them and combine that with your price action, right? So things could sell off more. Obviously, there's some room here on our simple moving averages as well. We're coming down to the 100, and there's even plenty of room, I guess, down to the 50, which kind of lines up with that gap on the 1 day, which I find to be an unlikely support zone. But I've seen crazier things, right? So if GameStop starts to trend below that again on its bottom trend line, then we can start to look for a momentum reversal, right? So right now, I guess I'd like to say that it's not dead. It's not over. We can wait and see what the week brings, right? The next week or two. What happens with these warrants? A lot's still in the air. We don't even have terms and conditions yet. So we don't necessarily have a full picture. And that could, as it's painted for us, be bullish, and that's going to drive some buying pressure. However, if not, then we track the reversal, wait for it to bottom, and then turn back again bullish, at which point we can go shopping for some options again and repeat the whole process, which is a lot of fun, and then just do it over and over and over again. So the MACD flipped negative on us again, and that's kind of what reminded me of like, okay, these are lagging indicators. So even though we had a sell-off from the S3 news and all of the new covered calls put on chain, this could flip back like that, is what I mean to say. So we're going to have to wait and see what Monday brings. Again, we've got only 60 days until earnings. So yeah, shop at GameStop, right? Buy all of the power packs that you can. Excited for an international rollout on that. I have my roaring kitty here in studio with me, saying hello to you guys on the wheel. The unbalanced volume looks good. So even though we had a massive price retracement, let's jump back over to my charts here. Our volume was okay, right? 30-day average 10 million, current day 11.6. So a little bit elevated, which is fine. But it's not 20 million. It's not 50 million volume. It's not a liquidity event. So I would like to still kind of wait for one of those to unfold. I don't like this. What has happened here? We still have a lot of time, I guess, for the warrants. I've seen people say, why do you think the warrants will play out so quickly? They don't expire for a whole year. Looking in the terms and conditions when those are released, will we have an early expiry clause in that? It could be that if the price is above a specific area for X amount of days, that the warrants will expire early, right? So again, there's a lot of information we don't know. Yes, they do expire in 2026 now, which gives us a long runway. That's fine. But that could potentially be shortened up on us. We'll have to wait and see. However, the price would have to be above $32 for that. And I think not only just above that, but above that by a premium, and then for X amount of days. Looking forward to that release. I think should come out on Tuesday-ish. Some people have their warrants in their accounts already. I do not. I checked this Saturday afternoon as a Canadian on Quest Trade. Well, I'm sure they'll be there. I know a lot of people are excited for that, and we'll have to see how the pricing on those goes. I would not be selling them personally under $32. I would be collecting them under $32 if you are trying to play that angle, as I believe they'll be in high demand. Whether or not they are the final piece we require is yet to be seen. I find it to be unlikely. It doesn't mean that it won't drive short-term price action. And that I feel confident that we can capitalize on repeatedly. So again, you play the reversal signals on the downside, right? Those trend reversals. And when, things look good, you scale out. You reduce your risk. You leave 20% of your options, not of you can hold all your shares if you want, diamond hand those, sure. But the option contracts, right? Scale those out. And if you do get that big move, then, you've absolutely nailed it. If not, and it falls back on yourself, you've already protected and scaled up profits so you can repeat the process next time with a little bit more weight in the trade, right? So thank you all so much for hanging out. I appreciate each and every one of you. If there's anything I can help with, please don't hesitate. I'd love to, do my best to answer any questions. And if there's something I don't know, then I get to go learn about it before I do so, which is great for me. Yeah, a bit of a sad weekend, I guess, for some. A lot of people holding those option contracts, not scaling them out. We're going to go through some options education. Again, not only for you, but a good refresher for myself as well. Options as a Strategic Investment, one of my favorite books. We've been through it a couple times now, and each time we read it, it just gets better. And GameStop, just what a fantastic stock to learn how to play options with. I know a lot of people have been burned on it. That's okay, because once you learn how to play it, you're going to make that back quite quickly, because it is, in my opinion, one of the most consistent plays that I've been able to make in the market. Oof. It's been my pleasure. I'll see you soon in the next. Take care of yourselves and each other. Toodles.